Here's a truth most traders won't admit. 90% of beginners lose money not because they pick the wrong stock, but because they cannot control themselves. Fear and greed dominate every trade. You see the chart spike and think, "This is it, my big win," and jump in without confirmation. That's amateur thinking. Professionals act differently. They treat every trade as a mechanical exercise, not a personal drama. Nicholas Darvas was once a ballroom dancer touring the world, with no formal trading education. One night, stranded in a Paris hotel, he watched a ticker tape on the wall. His first instinct was excitement, but he paused. He realized that rushing into a stock without a system would destroy him. That night, he began crafting his method: position size, stop loss, and tape reading, not gambling, but disciplined accumulation. The contrast between amateurs and professionals is stark. While amateurs chase every tip, professionals define their rules in advance. They calculate risk, identify pivotal points, and plan exits before touching a single share. Darvas's brilliance was in realizing that emotional reactions are the enemy. He observed the tape, understood volume surges, and let the market confirm its story before committing. Here's the hook: Darvas's rules are not about finding the next hot stock. They are about creating a system where risk is defined, patience is cultivated, and emotional volatility is neutralized. You'll discover the hidden pivotal point concept that changed his trading forever. But first, you need to understand why waiting is sometimes the most profitable position of all. Many traders misinterpret waiting as inactivity. They see idle hands and assume lost opportunity. Darvas saw the truth: doing nothing is sometimes the most powerful trade. Amateurs trade on instinct. Professionals trade on confirmation. Amateurs confuse excitement for opportunity. Professionals know that the tape doesn't lie, but emotions do. One impulsive move can destroy months of careful accumulation. One disciplined wait can compound gains far beyond imagination. The stakes are high. One mismanaged trade can wipe out weeks of gains. Yet, the promise is just as high: a disciplined approach can turn a chaotic market into a structured playground. Picture the market as a ballroom. Amateurs stumble, tripping over emotions and noise. Professionals glide, following rules, responding to signals, and letting momentum carry them. By the end of this video, you will see that Darvas's life lessons go far beyond trading. They are about cultivating a mindset that separates amateurs from professionals in every area of life. And before we dive into his first major principle, ask yourself this: are you willing to wait as a position, or will you chase noise like every amateur does? Patience, as you'll see, is the invisible edge. And the first rule is so simple, it almost feels like cheating. Amateurs cling to losers. They rationalize, justify, hope. Darvas called it emotional anchors dragging you into ruin. He once bought a stock that plunged 15% in a single session. Instead of panicking, he referred to his stop loss, cut the position, and moved on. That's professional thinking. Risk is always quantified. The problem is clear: beginners see a loss and convince themselves it's temporary. They say it'll come back, and watch as fear grows, capital erodes, and confidence diminishes. Professionals approach losses differently. They treat every misstep as tuition, an unavoidable cost of learning, not a failure. The first rule of survival is simple: define your stop loss before you enter a trade. Know exactly at what price your position becomes unacceptable, and obey it without hesitation. Position size matters just as much. Never risk more than 1 to 2% of your account on a single trade. This is not caution, it's discipline. Professionals understand that surviving another day is more valuable than being right today. Anecdotally, Darvas watched the market around him swing violently. He saw traders holding beyond their limits, clinging to hope, only to face catastrophic losses. By contrast, his adherence to stops preserved capital, giving him the freedom to spot the next real opportunity. Maxim: losses are tuition. Pay early, graduate faster. That aphorism is deceptively simple, but it carries the weight of experience. It underscores a paradox: doing nothing is sometimes the best trade. Waiting as a position is not an action, it is calculated patience. Every amateur mistake in the market begins with emotional attachment. Professionals detach. They cut losses fast, freeing mental space for the next trade. This discipline is the gateway to pyramiding, the process of adding to winning positions safely. But pyramiding can only be done after the first trade is disciplined. Without cutting losses, pyramiding becomes reckless, magnifying the same mistakes amateurs make. Think of the tape as a teacher. It rewards those who listen and punishes those who ignore. If you cling to a losing trade, you're ignoring the market's lesson. The cliffhanger is clear. Professionals know that the next trade is always more important than the current one. Your ability to detach, to cut losses, and to move on defines whether you remain an amateur or step into the realm of professional trading. Ask yourself honestly, can you let go of yesterday's mistakes, or will you let them dictate today's decisions? The answer determines not just your profits, but your survival. Amateurs risk big when excited and tiny when scared. Darvas noticed this in himself early on. He once described buying shares worth 30% of his capital in a euphoric moment, then realizing he could sleep only fitfully because he was overexposed. The thrill of a potential gain had clouded his judgment, and fear had immediately taken over. Trading without proper position sizing is emotional Russian roulette. One bad day can erase months of disciplined gains, leaving the trader frustrated, anxious, and often bankrupt. Professionals approach this differently. They calculate position size according to risk tolerance. Before entering a trade, they determine the maximum loss they are willing to endure, then reverse engineer the number of shares or contracts accordingly. This mathematical approach shields them from panic, from overleveraging, from the impulsive swings of fear and greed. Darvas understood this intuitively. He once pyramided successfully because his position sizes allowed him to add only when confirmation arrived, without risking his entire account. He built layers methodically, each addition a response to the market signal, never to his emotion. Maxim, size small, win big. That phrase captures a paradox that most amateurs never grasp. The smaller your position, the larger your emotional bandwidth. Small positions let you hold longer, wait for confirmation, and avoid panic selling. They provide room for rational analysis, rather than reactive decision-making. Pyramiding, when done correctly, becomes not an act of greed, but a reward for disciplined patience. It compounds profits safely, leveraging only the confirmed momentum of the tape. Yet position sizing alone is not enough. Without understanding pivotal points and reading the tape, even perfectly sized trades can fail. The market's heartbeat, the subtle changes in volume, price acceleration, and confirmation, tells you when to act and when to wait. Professionals internalize these signals, amateurs ignore them, relying instead on hope or rumor. Darvas's edge came from combining precise sizing with meticulous tape observation. He didn't guess, he calculated, observed, and executed. Every small position, every measured addition, reinforced a framework that minimized risk and maximized controlled opportunity. The soft cliffhanger emerges here. Position size is your lifeline, the structural support of professional trading, but without reading the market correctly, it is meaningless. Can you respect the math enough to follow it blindly, or will emotion override logic at the critical moment? The next lesson will reveal exactly how to read the tape, identify confirmation, and interpret pivotal points, the heartbeat of professional trading. Master this, and your position sizing will transform from theory into actionable profit. Amateurs ignore the tape. They chase rumors, tips, or charts without context, hoping to catch the next move without understanding the market's rhythm. Professionals, by contrast, read the tape like a heartbeat, noticing subtle shifts in volume, speed, and confirmation. Ignoring the tape leads to delayed reactions, missed pivotal points, and emotional overtrading. Darvas discovered this firsthand while tracking a stock climbing in Paris. He watched the ticker meticulously, observing not just price movements but volume surges, the tempo of trades, and how momentum built. He waited until the tape revealed accelerating volume, a confirmation signal that the market truly supported the breakout, before committing. That patience translated into massive profits. The protocol is deceptively simple: observe price and volume together. Seek confirmation. If a breakout occurs with strong volume, it is more likely to sustain. Avoid emotional interpretation. Let the tape dictate your action. Professionals know that the market speaks in signals, not whispers of hope. Darvas's maxim encapsulates this perfectly: the tape doesn't lie, your instincts do. Anecdotes abound. A novice might have jumped at the first breakout, driven by excitement or fear of missing out. Darvas, however, waited as a position. He watched, calculating, observing, and allowing the market to confirm its story. Patience multiplied his gains exponentially. Here's a crucial paradox. Doing nothing is sometimes the most profitable trade. While amateurs flail in chaos, professionals allow the tape to guide them, understanding that timing and confirmation outweigh impulse. Each tick, each surge in volume, each pattern informs whether to act or wait. Recognizing this separates the amateur from the professional, because the difference is not in intelligence or luck, but in discipline and observation. By internalizing the tape, Darvas could identify pivotal points that indicated when momentum was genuine and when it was false. Every successful trade began with reading the market correctly. Pattern interrupts are vital here. Waiting is not weakness, it is preparation. Doing nothing can be as strategic as buying at the perfect moment. Soft cliffhanger, mastering the tape answers when to act, but it naturally raises the next question. When and how should you pyramid your positions to maximize gains without risking control? That is the principle we explore next, because the tape alone, without proper execution, leaves profits unrealized and opportunities wasted. Amateurs pyramid randomly, often over-leveraging, driven by excitement or the illusion of guaranteed success. They layer positions without confirmation, adding more risk than they can handle, and frequently turn winning trades into disasters. Darvas, however, pyramid with surgical precision. He added to winning positions only after confirming momentum at pivotal points. The problem with random pyramiding is obvious. Without discipline, a small gain can quickly evaporate, and a momentary surge can wipe out accumulated profits. Professionals approach pyramiding as a controlled process. The protocol is simple but non-negotiable. Add to positions only after the stock validates a breakout. Each layer should be smaller or equal to the previous, ensuring that risk never exceeds comfort. Every addition must respect stop-loss discipline. Never let the market dictate your emotions. Darvas's biggest gains came not from a single purchase, but from disciplined layering over weeks. He treated the market like a measured performance, adding only when confirmation appeared and momentum was undeniable. Maxim, add slowly, compound confidently. That phrase encapsulates the paradox amateurs rarely understand. Patience compounds more than speed ever could. Every pyramid starts with patience. The stock does not care about your ego, your fear, or your need to act. Pattern interrupt. Doing nothing until confirmation is itself a strategic move. Each additional layer becomes a tool to magnify gains while preserving control, rather than a reckless bet. Anecdotally, Darvas described stacking positions over several breakout confirmations, each move smaller than the last, allowing him to ride trends without excessive exposure. Contrast this with amateurs who throw all their capital into a single euphoric spike, only to see a sharp reversal erase profits in minutes. Here's the deeper psychological lesson. Pyramiding is not just about mechanics, it tests your mind. Position size, tape, and pyramiding can be mastered technically, but controlling fear and greed is the ultimate challenge. Every additional layer requires restraint. Every added position is an invitation for emotion to interfere, and professionals recognize that. The cliffhanger is clear. You can understand position sizing, read the tape, and execute disciplined pyramiding, yet if you fail to confront your own mind, fear and greed will undermine every principle. The next chapter focuses precisely on this: how to master patience and emotional control, turning the trader from amateur to professional in the only way that matters, by dominating the psychological battlefield that the market presents every day. Without this, even perfect execution becomes vulnerable, and all your carefully built pyramids risk collapse under emotional pressure. Amateurs act impulsively. They jump at every spike, rumor, or tip, mistaking excitement for opportunity. Professionals wait. Darvas emphasized waiting as a position, understanding that patience is an active strategy, not passive hesitation. One of his best trades involved weeks of inaction, observing the tape, watching confirmation form, and letting pivotal points reveal themselves before committing. The problem is clear. Impulse trading is fueled by emotion, not rational analysis. Beginners react to fear or greed, believing that action equals progress, when in reality, premature action often leads to losses and regret. Professionals see this differently. Waiting is a calculated tactic. The protocol is simple but requires discipline. Wait for confirmation, wait for pivotal points, wait for clarity. If nervousness arises, it is usually a signal to hold. Waiting is a trade in itself. Anecdotes illustrate this principle vividly. A young trader, driven by hype, bought a stock immediately after a media spike, watched it plunge, and abandon discipline entirely. Meanwhile, Darvas's method of patient observation consistently outperformed such impulsive trades. By refusing to engage without confirmation, he preserved capital and allowed real opportunities to develop fully. Maxim: patience is your invisible edge. That edge is deceptive because it does not produce instant gratification. It works silently, compounding advantages over time. Every professional trader knows the paradox. The market rewards those who resist the temptation to act too soon. Waiting allows for proper position sizing, controlled pyramiding, and disciplined adherence to stop losses. Pattern interrupt: doing nothing can be the most profitable trade. While amateurs flail, professionals let momentum and tape signals dictate their timing. Patience intersects with every principle learned so far. It is the glue holding position sizing, pyramiding, and confirmation together. Without it, even the best rules fail under the weight of emotion. Darvas understood that market timing is not about reacting to noise, it's about listening, watching, and letting the market demonstrate opportunity. Waiting is a strategic choice, one that tests self-control and emotional mastery. Soft cliffhanger: mastering the tape, pyramiding, and patience positions you above amateurs, yet if you ignore risk, stop loss, and position size, you remain vulnerable. The next chapter dives into confirmation: how to align signals before committing, ensuring that every trade executed is supported by evidence, not hope. This is the bridge from patience to precision, the moment where amateurs falter and professionals excel. Without confirmation, all the waiting and discipline can be wasted on false moves, leaving the trader exposed to losses that could have been avoided. Amateurs enter trades without evidence, relying on instinct, tips, or fleeting excitement. Darvas approached the market differently. He waited for clear, multiple confirmations, a rising tape, supportive volume, and momentum at a pivotal point, before ever committing capital. The problem with acting without confirmation is obvious: it invites failure. Traders may feel right, but the market doesn't lie. Acting on incomplete signals often leads to losses that could have been avoided with discipline. Professionals understand that confirmation is the filter between noise and opportunity. The protocol is straightforward but requires restraint: confirm before committing. If the market does not validate your thesis, step back. Every professional trade requires at least two signals aligning to reduce risk and improve odds. This is not overcaution, it is survival logic. Darvas exemplified this discipline. He bypassed dozens of trades that seemed promising but lacked tape confirmation, preserving capital for the next big move. Each missed trade was a conscious decision to protect resources and avoid emotional regret. Maxim: confirmation precedes commitment. This aphorism is deceptively simple. Waiting for validation ensures that every position is supported by observable momentum rather than hope. Pattern interrupt: the trade that looks obvious is often the most dangerous if it lacks confirmation. Professionals know that the market rewards patience and punishes impulsivity. Anecdotes reinforce this lesson. Darvas frequently watched a stock climb for days, refusing to act until volume, tape movement, and pivotal points aligned perfectly. Once confirmed, he entered with conviction, confident that his risk was controlled and his position strategically timed. Contrast this with amateurs who enter too early, only to watch the market reverse and their capital erode. Waiting for confirmation also allows proper integration of other principles. Position size, stop-loss discipline, and pyramiding become more effective when applied to confirmed moves. Confirmation turns theoretical rules into actionable trades. It is the bridge between observation and execution. Soft cliffhanger: with patience, tape mastery, position sizing, pyramiding, and now confirmation, you are approaching the final frontier of professional trading, the psychological game. It is here that the market's true challenge is revealed. Fear and greed are relentless, constantly testing your discipline. Understanding signals and executing rules is essential, but without controlling your mind, even the most calculated trade can fail. The next chapter will focus on mastering these emotions, transforming all technical knowledge into a framework that consistently separates amateurs from professionals, ensuring that discipline becomes second nature rather than a daily struggle. Amateurs let fear and greed dictate their actions. They react impulsively to every swing, convinced that emotion equals insight. Darvas's greatest insight was that the market punishes emotional traders relentlessly. He compared emotions to a heavy coat, dragging you down while others move lightly, able to respond, adapt, and profit without hindrance. The problem is stark: emotional trading leads to inconsistent results, missed opportunities, and avoidable losses. Beginners may experience short-term wins, but without discipline, those gains are often reversed. Professionals recognize these internal obstacles and neutralize them. The protocol is precise. First, recognize fear and greed as they arise. Step back. Follow the rules mechanically. Every action, position sizing, stop-loss execution, tape reading, should be governed by the framework, not by whim. Risk is managed systematically, not emotionally. Anecdotes illuminate the difference. During the 1960s, Darvas witnessed a stock surge dramatically. His initial excitement tempted him to buy more than his plan allowed. Instead of yielding to emotion, he paused, observing tape, volume, and pivotal points. Only after receiving confirmation did he add safely, executing a trade aligned with his method rather than his feelings. This exemplifies the mastery of emotional control, patience over impulse, confirmation over hope, discipline over excitement. Maxim: control emotions, or they will control you. That principle underpins every successful trade and defines the separation between amateur and professional. Pattern interrupt: your emotions are always louder than the market. Quiet them, and the real signals become clear. Darvas's success was not just in technical rules, but in mastering the internal landscape of trading psychology. Fear of missing out, greed for rapid gains, or frustration with delays, all can sabotage even perfectly designed strategies. Professionals anticipate this and build processes that remove emotion from execution. Every rule introduced so far, cutting losses fast, sizing positions, reading the tape, pyramiding, patience, confirmation, relies on emotional mastery. Without it, the framework collapses. The cliffhanger is explicit. Every principle points toward one ultimate mindset: owning the process. Understanding rules and executing trades mechanically is essential, but the final step is internal. The next chapter reveals how Darvas combined all these principles into an unbreakable framework, a cohesive system where risk is controlled, emotions are neutralized, and decisions are driven entirely by method and market signals. This synthesis is the threshold between amateur behavior and professional consistency, where knowledge and psychology merge to create repeatable success, free from the traps of fear and greed that ensnare most traders every day. Amateurs chase outcomes. They focus on profits, targets, and what-if scenarios, letting results dictate their emotions. Professionals, by contrast, own the process. Darvas approached trading like a disciplined performance, not a gamble. Every element of his system, position size, stop-loss, tape reading, pyramiding, patience and confirmation, was executed according to rules, not whim. The problem with chasing outcomes is clear: it leads to impulsive trades, emotional overreaction, and inevitable disappointment. Beginners see a rising stock and panic buy, or watch a dip and sell prematurely, believing they must control results. Professionals understand that the market is indifferent to desire. The protocol is simple but requires unwavering discipline. Focus entirely on executing your rules. Follow the steps consistently, and profit becomes a byproduct, not an obsession. This shifts the trader's mindset from reaction to control. Anecdotes from Darvas's life illustrate this vividly. While touring as a dancer, he observed stocks during intermissions, paying attention to tape and momentum while traveling. He did not obsess over immediate profit but concentrated on executing his method precisely. Over time, this focus multiplied his gains exponentially. By detaching from outcomes, he avoided the emotional swings that trap amateurs, maintaining consistency across diverse market conditions. Maxim: own the process. Profit follows. This principle captures the essence of professional trading. Mastery comes from action within your control, not from chasing the unpredictable. Pattern interrupt: the market does not reward desire, it rewards execution. Professionals internalize this, turning rules into reflex and analysis into habit. Every trade, every addition, every decision flows from the framework, not from hope, fear, or impatience. Soft cliffhanger: mastering the process prepares you for the final principle, the synthesis of all lessons into a single actionable framework. When you combine cutting losses fast, sizing positions correctly, reading the tape, pyramiding methodically, exercising patience, waiting for confirmation, and controlling emotion, you create a cohesive system that turns discipline into consistent performance. The next step reveals how Darvas integrated these elements seamlessly, producing a mindset where risk is calculated, decisions are rule-based, and emotions are neutralized. This synthesis is the final barrier separating amateur traders from professionals who can repeatedly navigate the market's complexity without succumbing to impulse, fear, or greed, and it sets the stage for actionable implementation in every trade. Understanding the process is mastering the battlefield before stepping into the arena, ensuring every move is deliberate, strategic, and resilient. Now, we close the loop. Every lesson ties together into a cohesive framework that transforms how you approach trading and decision-making. Cut losses fast. Size small. Wait. Read the tape. Pyramid selectively. Seek confirmation. Master fear and greed. Own the process. Darvas transformed a ballroom dancer into a professional trader by internalizing these rules, proving that method and mindset outweigh raw intelligence or luck. The hidden lesson from Chapter 1 becomes clear. Patience is not passive, it is strategic. Waiting as a position is a trade in itself, a deliberate act that allows the market to reveal its true direction. Every principle interacts, creating a lattice of disciplined execution. Stop loss without position size is reckless. It risks more than survival allows. Pyramiding without confirmation is gambling. It magnifies exposure without structural support. Tape without patience is noise. It misleads the impatient into premature action. Fear and greed unchecked will destroy every amateur, erasing profits and confidence alike. Professionals, by contrast, treat each principle as a tool, not a hope, combining them to create compounding advantage over time. Actionable lines crystallize the framework. Cut losses fast. Size small. Wait. Own the process. These are not suggestions. They are non-negotiable rules for surviving and thriving in a chaotic market. Darvas's genius was not simply in spotting trends, but in building a system that allowed him to exploit them repeatedly without emotional interference. Every trade became a measured action, every decision an application of rules rather than reaction to impulse. Pattern interrupt. Even when the market screams opportunity, the disciplined trader waits for confirmation, follows the process, and acts from strategy, not fear or greed. This synthesis of principles forms the Darvas mindset, a structure where risk is quantified, emotional volatility is neutralized, and execution is consistent. Professionals understand that mastery is not about predicting outcomes but about controlling inputs. Every aspect, from tape to pyramiding, patience to stop-loss, is a lever for controlled success. If you internalize this framework, the next lesson on advanced tape reading and pivotal points will deepen your edge, refine your execution, and create a mindset that separates amateurs from professionals forever. This is the culmination of everything learned, a methodical, repeatable system where the market is navigated with clarity, confidence, and discipline. Your edge comes not from luck, timing, or instinct, but from adherence to the process that Darvas refined through years of observation, patience, and practice.